Hello friends, I'm going to continue my discussion on interest on drawings. In the last lecture, I took two very simple cases that a partner withdraws money on the very first day of an accounting period. So we will charge interest for the whole period. And the second was that the partner withdraws money in the middle of year. Okay, and we will be charging for 6 months. And I told you that the interest will be charged for the period the money has been used by the partner. The money withdrawn has been used by the partner. Now I'm moving on. I'm taking the next case now. In those two cases, the withdrawing was only once in a year. Okay. Now I'm saying that a partner is withdrawing fixed amount a fixed amount of say rupees 1000 in the beginning of every month. In the beginning of now what it means that there are multiple drawings in a year. For each drawing we will calculate the amount of the number of months for which the money is being used. We'll calculate the period for which this money is being used. Now what is happening is, I'll say rate of interest say 15%. Now what is happening, we are standing on 1st of April 16. He is withdrawing 1000. This 1000 he'll be using for the whole year. Clear? So we'll calculate 15% on this amount, comes to rupees 150. Now he's withdrawing again on the 1st of next month, that is on 1/5 2016, because what we are saying is he's drawing fixed amount. The amount is fixed amount of rupees 1000 in the beginning of every month. Okay, so here again he is withdrawing 1000, 15%. But now this 1000 he is not using for 12 months, because he is withdrawing this money on 1/5 2016. Now for how many months he is using this money? For 11 months. So we'll charge interest for 11 months. Clear? Similarly, if I say now he is withdrawing on 1/6, because in the beginning of every month. Now for how many months we will charge him? He is using money from 1/6 2016 to 31st of March. 10 months. Clear? Now this calculation will go on for a very long. We'll have to calculate for every month, like we are calculating for 1/4, 1/5, 1/6. This can be a very lengthy calculation. So for making it short, what we will do is we'll take an average period. What we will do is we'll first calculate average period. Now what is average period? Average period says period left after the first drawing. Period left after first drawing. Now first drawing is on 1/4/2016. What is the period left after this? 12 months, right? Plus the period left after last drawing. Now if he is withdrawing in the beginning of every month, the last drawing will be on 1st of March 2017. Clear? For that accounting period. What is the period left after last drawing? 1 month. He is using this money for 1 month only. We'll take a average of this. We'll divide this by 2. So if I take this case, what will be the average period? What is the period left after the first drawing? First drawing is on 1st of April 2016. So he is using this money for 12 months. And what is the period left after last drawing? Last drawing will be on 1st of March because he is withdrawing on the 1st of every month. What is the period left after last drawing is 1 month, because on 31st March we'll close the books. Divided by 2. This comes to 6.5 months. It means that we will calculate the interest on drawings for 6.5 months because we are taking the average of months, right? Now what will be the interest? What will be the interest on drawings? It will come to 1000 into 15% for how many months? 6.5. Sorry, here it's going to be, because we are calculating for the whole year, it will be 12,000. 1000 into 12. This amount comes to rupees 975. Clear? We'll calculate the interest on drawings for the whole year in one go. We'll calculate the average period, that is the period left after the first drawing, add the period left after the last drawing, divided by 2. Average. For this period, we'll calculate the interest on drawings. Interest on drawings 1000 per month, 12,000 for the whole year. 15% is given for 6.5 months. Clear? This average period you can note down how to calculate. Now next I will say that money withdrawn, he is withdrawing 1000 at the end of every month. Now earlier it was in the beginning of every month, now it is the end of every month. So the first drawing will be on, when will be the first drawing? If he is withdrawing at the end of every month, the first drawing will be on 30th of April 16, and the last drawing on 31st of March. Clear? So we'll calculate the average period. What is the average period now for the first drawing? What is the period left after the first drawing? He is withdrawing on the last day of the month. So for the April we will not consider it. What will be the period? For how many months he is using this money? Of first installment, first drawing. He is using it for 11 months. And the last installment, there is no month left after this. So we will not be charging interest on this money for in the current accounting period. 0 divided by 2. This comes to 5.5 months. Clear? So what will be the interest? Interest on drawings will be 12,000 into 15 for 5.5 months. This comes to 825. Clear? See, very simple. We have to see that the first installment, first drawing, okay, what is the period left after the first drawing? For how many months he is using the first drawing, and for how many months he is using the last drawing, right? We'll take an average of that, and the interest is to be calculated for that average period. Now I'll take a third case. He is withdrawing 1,000 in the middle of every month. In the middle of every month. Please keep writing these cases. So these are very important, because in the question you will be given the amount of drawings, the rate of interest. Clear? So he is withdrawing 1,000 in the middle of every month. Now average period, first drawing on 15th of April 16, last drawing on 15th of March 17. Clear? In the middle of every month. So for the April, the middle is 15/4. For last month is March. What is the average period now? This first drawing is being used for how many months? 11.5 months. And this last is being used for how many? 0.5, half month only, divided by 2. This comes to 6 months. That means we'll calculate interest on drawings for 6 months. Interest on drawings is equal to 12,000 into 15% for 6 months. This comes to clear? Because these points are very, very important, and these are very simple. Sorry, here it is to be 17. You have to just calculate the average period. Average period is the number of months for which the first installment of drawing is being used, and the number of months for which the last installment of drawings is being used. I told you that you have to just calculate the number of months or the period for which the amount withdrawn is being used by the partner. For that period only we will charge interest from him, for the period that he is using our money. Okay, if he is not withdrawn, if he has not withdrawn for April month, we cannot charge him for that month. We will charge for the months leaving April, that is 11 months. Okay, so here he is withdrawing every month, either in the beginning or in the middle or at the end. So we will calculate average period. Average period is the money being used for how many months after the first installment of drawing and for after the last installment of drawing. Take average of that period and interest on drawings for that period. Clear? Now I'll take the next one. Say he's withdrawing amount 1000 in the beginning of every quarter. Now what will happen? We have 4 quarters, 3 months each. So when will be the first installment? First installment will be on 1/4/16 and last drawing will be on the beginning of the last quarter. Last quarter is January, February and March, and the beginning of the last quarter will be 1st of January 17. Happy New Year. Okay, clear? So what will be the average period? Average period will be, this money is being used for whole year, this 1/4/16, it will be 12 months, plus this money is being used, this is being withdrawn on 1st of January, now being used for how many months? January, February and March, 3 months. This comes to 7.5 months. And then you can calculate the interest on drawings for this period. Interest on drawings will be 12,000 into 15% into 7.5 months. Sorry, here the amount will not be 12,000 because he is withdrawing only 4 times. So this amount will be, please note this down carefully, this amount will be not 12,000, this will be 4,000, because he is withdrawing total 4,000 in a year. 1,000 on 1st of April, then 1,000 on 1st of July, and then 1,000 on 1st of October, and then 1,000 on 1st of January. So he's withdrawing 4,000, not 12,000. Okay, clear? So whatever be the amount, calculate. Now next case, similar to this, I'll say he's withdrawing 1,000 at the end of each quarter. At the end of each quarter. Now when will be the first installment? First quarter, April, May, June. At the end of June, that comes to 30th of June. And what will be the, this will be the first drawing, and what is the last drawing? What is the last quarter? January, February and March. End of the last quarter is 31st of March. So what will be the average period? Now what is the period left after the first drawing? For how many months the first drawing is being used? For 9 months, because for the first 3 months it is not being used by the partner as drawings. And here the last drawing 0. So it comes to 4.5 months. So calculate interest on drawings similarly like this, 4,000 15%, here it will be 4.5 months. Clear? Now next case. Next case is, I'll say he's withdrawing 1,000 in the middle of a quarter, in the middle of each quarter. Clear? Now if he is withdrawing in the middle of each quarter, what will be the first, when will be the first drawing? The quarter is from April, May and June. In the middle of quarter means he is withdrawing on 15th of May. And last drawing, will be in the last quarter, middle of last quarter, 15th of February 17. Now what is the average period left? For how many months this first drawing is being used? For 10.5 months, and the last drawing for 1.5. This comes to 12, 6 months. So we'll be calculating interest on drawings for 6 months. Interest will be 4,000 into 15% for 6 months. Clear? So this is how we will be calculating interest on drawings if in the question we are given the drawings and the rate of interest. Clear? Very clear? See, very simple. You have to just know how to calculate the average period, and for that I have given you one simple line, that what is the period? First of all, determine the number of months for which the amount withdrawn is being used by the partner. That is the period for which we will be calculating the interest, right? If he is withdrawing on the regular basis, then we'll calculate average period. We'll say for how many months the first drawing is being used by the partner, and for how many months the last drawing is being used by the partner. Calculate the average of that and interest on that calculated average period. Clear? Now note down the few points regarding this important. Please note this down. Now this method is applicable, average period is applicable average period method is applicable only if first is the amount withdrawn is fixed, amount withdrawn is fixed. Like in the example, I told you that he is withdrawing 1,000 every month, right? Second is the interval between two drawings is equal, right? That means that the time period between the two drawings should be equal. Like he is withdrawing on first every month, that the time period between the two drawings is equal, because he is withdrawing on 1/4, 1/5, 1/6, 1/7, 1/8. Okay, 1 month. So the average period method is applicable only if amount withdrawn is fixed, number one, like we took 1000. Second, the interval between the two drawings is equal. Only then we can apply the average period method. Clear? One more point. One more point is that if in the question it is given to you that rate of interest is 10%, that's it. Per annum is not given to you. It is given that the rate of interest is 10%. Then what you have to do is ignore time period. Clear? Straight away calculate the interest on drawings at the rate of 10%. That's it. Ignore the time period. Clear? Note these points. These are very important because these points can be really tricky while doing questions. If it is given rate of interest is just 10% without the words per annum, then ignore time period. Next point. If time, or I can say date of drawings is not given. If it is not given, then when the drawings are made, that in the beginning of month, in the end of month, in the middle of month, it is just said that the drawings are being made. Then for how long you have to calculate the drawings, for how much period you have to calculate the drawings, interest on drawings, interest on drawings will be calculated for 6 months, right? That is the average of whole year will be calculated for 6 months. But if, take an example that the business is starting on 1st of October, then we already have 6 months. If the accounting period, I'll not say this as the fourth point. Write down in point number 3 only. If accounting period is less than 12 months, okay, then we cannot calculate for 6 months, because 6 months is when we are having the full accounting period of 12 months. Then interest will be calculated for how many months? For half of accounting period. So if the accounting period is 6 months, interest will be calculated for 3 months. Okay. So these are important points. Be careful with these points. These points can be really tricky in examinations. You will be given rate of interest 10%. You will not be given this per annum words, and you will apply the time period, and you will get 0. When the words per annum are not given, time period is not to be applied. The time or date of drawings is not given. Don't calculate for the whole year. Calculate for half of the period. That is 6 months. Accounting period less than 12 months. Calculate half of accounting period. Clear? So, these are some important points relating to interest on drawings. Clear? We have discussed the cases where the drawings are equal and the interval between the drawings is equal. Clear? So what we'll be doing is we'll calculate the average period, that is the period left after the first drawing, or I can say for how many months the first drawing is being used as drawing by the partner, and for how many months the last drawing is being used. For how many months the last drawing is being used by the partner, divided by 2 average. Calculate interest on drawings for that average period. Clear? So please note this down. In the next lecture we will do case where the amount is not fixed, okay, and the interval is not fixed. We'll do these 2 cases, but these points are applicable in all the cases, so be careful with this. This is applicable in average period. Please note these points. These are very, very important from the examination point of view, because these points can really be tricky.